Hi, this is the weekly recap. Today is Monday the 18th. It is 8 o'clock, just after 8 a.m. in the UK. So I waited for market makers to price SPX options to see how things are going. I also see that the futures are up. The CFD, which is my favorite proxy on IB for SPX before market hours, is up and now is hitting the 31.25 resistance. Anyway, this is not exactly an update on the market outlook, which I posted already, but it is clear that the market is bullish. It is not clear whether we'll have some rejection here. This is a very strong resistance area, and this may be a decision point. What you're seeing here is the December regular Rhino. This trade is going nowhere. It's at the end of the sweet spot. Of course, we can tweak to make a bit more, and it would be as it is often recommended when the market is bullish and at the same time volatility dropping to reduce the trade. We will see what I did last week on the B2B trade. So the question is, are we going to close the trade or carry on tweaking and reducing the trade by doing short condors? So simplifying the trade, I could reducing this way. That would be one strike less, a tiny credit, probably less than $1, or just about $1. So it's about okay. Of course, this is a pre-market pricing. It could change a bit. But if you want to keep the trade a bit longer, considering that 32 DT is still plenty of time, as I said earlier, either the market drops sharply, breaking support, and if we look at 2SD would be yeah, um, 2SD would be still okay. But if we have let's say a 4 or 5% drop, it would be 120 points, and we would have. Of course, we can't plot the VOMA here, but this is always something I recommend calculating, and it is available on my SOAP software. Definitely, we are in an area where the delta is too flat. Of course, Vega is still flat, so there would be not much of an impact, maybe for 2 to 3%. We would be safe and probably making a bit more. I mean, of course, there's a possibility that the Vega being minimal, there would not be much of a flattening. So this could be interesting to do. However, if volatility pops with a vengeance, there is a slight risk. But of course, then we would hang in there for a bit longer. I mean, it is a very safe trade overall. So it's a very personal decision, and I would be inclined to close the trade. That being said, 32 DT, we can probably wait a bit longer. We have Black Friday, and so it's maybe keeping it on for another week at least would not hurt at all. So this is my planned adjustment on this trade. The upper expiration line would be slightly higher, maybe around 1200. So this is something we can consider. Now let's have a look at BTB. Oh, but before doing that, quick look at the trade log. And as you can see, we did nothing last week. BTB, thanks to the last adjustment, it is now catching up with a regular trade, and it is kind of similar. I've only used very few additional layers on the regular trade, so the trade management has been fairly standard on both variants. In other words, the BTB management has not been constrained by the fewer possible adjustments of the classical Rhino. So here as well, a bit more strikes, so it's a good time to simplify the trade, and it would be, and of course, same question, it could be closed at this point. And if we look at these strikes, this is something we can do. We reduce a bit of capital usage. The trade would be in a about 4%. So really minor tweaking, simplification or closing. That's it for December. Now a look at January. January is okay considering the tough market for our non-directional trades. The upside risk, and if we look at now being about 60 days, upside risk is only about $600, $700. So it's still fine. Delta is okay. It has a bit more negative Vega, but still quite reasonable. This trade has less cover on the downside. I mean, if the market drops 100 points, that would still be okay. If it drops more, and also considering that this trade is now reaching its matured stage where it can be a bit more sensitive to volatility gyrations. It is losing its natural resilience that it has when we start and for the first two to 3 weeks. And that could be a reason also, and maybe as an aside, if you look at training courses, if you look at back tests, people will look at each and every trade individually. I think it's a wrong way. As a matter of fact, you must always look at your portfolio of trades, or at least group in strategies if you trade other strategies than the Rhino. But what I'm saying is that it is also a justification or motivation to de-risk the little risk left in December, or close it, so that we can concentrate on January, and maybe instead of rolling back, we are not using that much capital. If the market drops sharply, we could then extend the tent on the left side. So at this point, there's nothing to do on this trade. It is reaching the end of the sweet spot, and we are now at 31.25, where I said I would do something. And I don't think that market is very palatable to add an additional layer. So we also have the possibility of mutating the trade into more RTT style. So that would mean reducing capital a bit and doing something like this. So a wide short put condor, not adding risk. It's not so much a question of flattening delta, but the additional Vega is minimal. I wouldn't place a CCS side or put a condor, a 9 condor on. And if I would probably make it safer around 1 SD on the put side, and I would place, yeah, and place the call side also about 1 SD. So that would be not my favorite scenario, because then it would of course increase. I mean, we would get premium, but not that much premium. But if we were to do something like this, we must be careful not to add too much negative delta and additional Vega. So this is something that can be envisaged. I would wait to see what's going on 31.25. So the simplest way is just a short put condor, and depending on what's happening on this strong resistance, I may go for this type of layer. As you see, nothing has been done in the last 3 weeks. So now the B2B trade. The B2B trade has more upside risk, and it's actually losing now a bit at minus 500. We must, of course, accept that the B2B trade is slightly more risky than the regular trade that is meant to be more conservative. And it also has fewer possible adjustments. So what we can do here is carry on with a short put condor as well, which is basically the part of RTT mutation, so that we are consistent in the way we deal with the trade. I would also consider that we have $16,000 in the market right now. I would probably make it 1. Now if you want to put 2 in, because here we would get already good premium, about $4, and it would be similar to the regular trade actually. If you want to be more bullish. That's not exactly the typical Rhino, because I don't really like getting delta positive, certainly not this early in the trade. So this is not exactly my cup of tea, but this is definitely a full mutation or conversion into RTT. So I would go for one, and that's maybe the only thing I would do on this trade. I don't think there's actually urgency to do that either, and it's probably better to wait to see what's happening again on 31.25. So that's all we have for SPX. This is the exact adjustment I made last week. Basically, a capital reduction in the form of an unbalanced condor, short condor. Now the Russell, to look at the baby Rhino. I decided to play around a bit, knowing that this trade would be safe anyway. So this trade is now with a flattish delta. It has no risk on the downside. Surprisingly enough, it still has some positive theta here. I'm prepared to play a little bit, considering there's only $268 in the market. So this is nothing. So this is really an exception. I usually don't carry a trade of to the final week unless it's really risk free. So I'm going to either close it or play around a bit longer. And I would say for most traders who are fairly new with baby Rhino or weekly trading, in general, this trade can be closed. It's going to be an average week around 2%. So this kind of extension to the baby Rhino is absolutely your decision. Here is the new baby Rhino for the week. I decided to go slightly more bullish with an additional PCS here. Otherwise, it is a fairly standard setup. Didn't have a great T plus 7 projection, but as you can see at the close, it looked about all right. So even here, a T plus 4, T plus 5, there's always some weakness on the upside, but the ratios are still okay, and I will wait to see whether the Russell follows the bullishness of SPX to see whether it's necessary to tweak it a bit to reduce the Vega here. I would just have to push short puts a little, for example, another 2 here. That would be okay. We can go delta positive on a short dated position, so that would be something that can be considered. The capital usage is 6.9, we can go up to 10, so really we don't have the normal constraint of low IV just yet. IV is low, but it's not terribly low, so we're not in a very difficult situation. In other words, it's just not 2017 again. So not much to do, a bit of ratio balancing if necessary today or tomorrow. We have FOMC coming on Wednesday, and so that's going to be probably, considering the market does not really follow any other economic news, the level of liquidities, in other words, the balance sheets, operations, and possible further reduction on rates, however unlikely, may also, considering the key levels the markets are, may actually bring in some surprise this week. Thanks for watching, and I'll be available as usual later on Slack. Bye for now.